Hello, it's Hiền Nguyễn from SD Consulting. In the Vietnam Capital Market video series, I have shared with you 3 videos in which the first one was the overview of the market. The second one was about the banking sector, and the third one was about the equity market. So today's video, I'm going to share with you about the bond market with snippets into the recent fraudulent scandals, fraudulent bond issuance. If you are looking to do business in Vietnam or to do investment in Vietnam, this is the right place for you. So let's get started. Before we look into the sections today, let's have a look at the overview of the bond market that I shared with you in the overview video. If you already saw this, you can skip this section and go ahead with the new one. Let's look into the bond market. The market for bonds in Vietnam is still dominated by the government bonds. So the government bond market has stabilized and tenors extended. At the end of 2021 and early 2020, the size of government bond market was around 24% of GDP, including bonds with diverse maturities, ranging from short-term 1 to 3 years to long-term more than 10 years. And in recent years, let's look into the chart. The longer terms have been issued more as compared to the previous decades or so. The short-term was issued more. Okay. After a difficult period of following the global financial crisis in 2008, the financial markets have stabilized and performed reasonably well in Vietnam despite the challenges of the COVID-19 pandemic. In July 2023, the total bond market is over $111 billion, nearly 28% of GDP. Let's look at the corporate bond market. The corporate bond market sector has been growing rapidly in the last few years. Okay, it's before 10 years ago there was no corporate bond at all, but in recent years there has been many companies issuing corporate bonds. The market cap to GDP has been more than doubled in the last 3 years. Okay, it's from less than 6% to 12.5% currently in 2023. However, this is still a modest amount compared to other countries in the region, and also far from the target set by the government, which is 20% by 2025. Here, the chart of the Vietnam corporate bond is very tiny compared to other countries in the region. The development of the local bond market in Vietnam is more recent. Compared to the equity market development, total corporate bond issuance during 2017 and 2020 period was 9 times of that during 2012 to 2016 period. Unlike the equity market, the bond market depends more on macro fundamentals for the development. Sound macro fundamentals such as low and stable inflation rate environment and stable exchange rate, sustainable levels of government debt, and also all the necessary matters for the development of the local currency bond market. Since investors would demand higher yield to compensate for duration and convexity risks. So learning from the effects of the macro instability in the periods of 2007 and 2008, and also the period of 2011 and 2012, Vietnam has maintained a stable macro environment in the last 6-7 years, which has helped develop the bond market in recent years. So let's look at the government bond. Despite some success in developing its size, the market still lags behind, and the legal framework needs to be improved to ensure transparency and reliability. So let's look more detail into it. The recent years, significant government efforts have been put into development of local currency bond market. New laws, decrees, and circulars have been into effect to build a solid legal framework and create an increasingly diverse portfolio of debt instruments for the government bond market. Recent changes in the legal framework have helped to build a more complete and liquid government bond market. In contrast to private bond market, the secondary market for the government bonds has increased in size as the Treasury has reduced the number of instruments and extended the yield curve to 30 years, providing attractive investments for insurance companies. This attempts to create a government bond market with more diversity in maturities also help to build the government bond yield curve, an important feature for the development of the corporate bond market. As you know, the yield curve of risk-free rate interest rates provides a benchmark for pricing risky bonds. Availability of derivative instruments such as future contracts of 5-year and 10-year government bonds helps increase liquidity in the secondary markets as well of underlying assets like the bond. Domestic banks are the main buyers in the secondary market. In line with international practice, in Vietnam, private placement bond issuance has less stringent legal requirements compared to public bond issuance, as professional investors are thought to have a better understanding of level of risk they are taking. In particular, following decrees, circulars, and laws provide a comprehensive legal framework for the corporate bond market. Decree 163/2018 provide guidance on the issuance of corporate bonds. Decree 81/2020 amends the previous decree. Decree 163 prohibited the resale of private placement bonds to retail public investors within a 1-year period to protect retail investors from what are seen as risky investments. However, this does not solve the problem because just after 1 year, the bonds can be sold to the public, and there is little public information available on the quality of the bond. Securities Law 2019 and Law of Enterprise 2020 provide a legal framework for corporate bond issuance for different types of enterprises. Decree 153/2020 regulates issuance and transaction of corporate bonds for private placements in the domestic and international markets. Decree 155 regulates issuance and transaction of corporate bonds for the public. Circular 122/2020 provides guidance on the information disclosure as required by Decree 153. So you see so many circulars. State Bank of Vietnam Circular 16 was also issued on November 10 of 2021 to reduce the risk of banking sector instability stemming from bond market transactions. The circular prohibits the issuance of new bonds to pay existing debt, which is intended to prevent companies in financial distress from restructuring their loans through the sale of new bonds. Bonds also may not be issued to purchase shares in other companies, a transaction often used in the property market. A requirement for information disclosure is also in place. In practice, however, some current regulations need further revision, modification, and supervision to be better promote the development of a well-functioning corporate bond market. Securities and other institutional investors can easily turn an average retail investor into a professional investor type of thing using co-investment contracts so that these investors can purchase corporate bonds by private placement. Indeed, in recent scandals have undermined the confidence in the bond market, especially the arrest on April 5th of 2022 of Tân Hoàng Minh Property Group officials in connection with the issuance of 10 trillion Vietnam dong, which is around $500 million in the corporate bonds in 2021-2022. In particular, this Tân Hoàng Minh scandal, the group was charged with submitting false information relating to the acquisition of land in Ho Chi Minh's Thủ Thiêm Peninsula. Retail investors signed a contract titled Investment Cooperation with Tân Hoàng Minh Hotel Trading Service Co. to buy bonds issued by companies from the Tân Hoàng Minh Group. Tân Hoàng Minh raised as much as 10 trillion Vietnam dong from this private placement issuance, taking advantage of loose legal requirements for such transactions. After submitting a successful bid at a very exceptionally high price, the company subsequently withdrew, raising concerns that the company would default on its bonds. The newest scandal in Vietnam is the recent scandal of Vạn Thịnh Phát with total 1,000 trillion Vietnam dong, among the top all-time world record of the fraudulent scandals cases. Setting up ghost companies and withdraw money from the bank and also bond issuances from this group. And at the end of the estimation, up to now, they estimated that the stolen money is half of that withdrawn money. Okay, so it's around $22 billion, nearly 6% of GDP of Vietnam. Vạn Thịnh Phát Group issued more than $1.5 billion worth of fraudulent bond issuances. With this size, the previous case that we just discussed is now just 1/3 of this bond issuance cases, and also nothing compared to the whole scandal cases. From 2018 to 2020, related subjects to Vạn Thịnh Phát Group's joint stock company and its related companies have committed fraudulent acts, violating the law, creating 25 bond packages with a total value of over 30 trillion Vietnam dong, which is 1.5 billion US dollar, to sell to the bondholders. The standard fine for disclosing falsified information is only around 400 to 500 million Vietnam dong, which is only around 17 to 20,000 Vietnam dong, which is insignificant sum, small compared to the trillions Vietnam dong that the firm raised from the corporate bond market. Moreover, disclosure of falsified information or concealment of information occurs frequently, in part due to the lack of supervision from the SSC. In response to the scandal, the government recently issued public notice number 304 calling for closer inspection of corporate bond market activities and land auctions. However, these cases drew attention to risks inherent in the domestic bond market, while greater involvement of and reliance on credit ratings agencies would help. The fundamental problem is the lack of transparency and reliability of financial reporting by domestic corporations, especially private held companies in the property sector. So notably, regulations that have either come into effect recently or will come into effect imminently include the following: mandatory credit ratings for large corporate bond issuance starting 2023, commitment to list bonds on the exchange after issuance started 2021, including submission of registration forms for bond listings within 30 days of issuance. Only professional investors can participate in private placement started in 2021. And after the recent scandals and some other real estate companies recently not be able to repay the bond and interest expense on time, the government recently issued a new decree, the Decree number 8/2023, amending, supplementing, and suspending the implementation of a number of articles in the decrees regulating the private offering and trading of corporate bonds in the market in the country, and also corporate bonds to the international market. So recent regulations are designed to create more centralized, more liquid corporate bond market. So despite the need for further improving in the legal framework of the corporate bond market, with its recent growth, this market has become an important channel for raising capital for some companies that can access the issuance market. In 2019 and 2020, the corporate bond market exceeded the equity market in terms of new capital issuance. Reasons are: first is that increasing need for cash flow by firms due to COVID-19. And the second reason is unfavorable conditions in the equity market due to the COVID-19. And the third reason was that the increasing need for non-bank sources of finance by real estate companies due to the Circular 22 in 2019, which raised the risk coefficient attached to real estate loans made by commercial banks from 150 to 200%. Lower supply long-term bank credit due to Circular 08/2020, which limits the ratio of short-term deposits used to finance long-term loans to 30% from previous 40%. The corporate bond market proves its spare tire role, which allows some firms to raise funds when other sources of finance dry up. Despite some success in developing the size of the market, the bond market in Vietnam still lags behind advanced regional countries when measured in terms of absolute value or by percentage of GDP. And this is especially true for corporate bond market. In 2021, the size of corporate bond market was 18% of GDP, right? Including bonds issued by private companies and SOEs. However, the corporate bond market, like the banking sector, is concentrated on SOEs. So if bonds issued by SOEs counted as government bonds, then the size of corporate bond market in Vietnam was only around 7% of the GDP as of 2022. And with recent scandals, I think the bond market will face some frozen period in coming time. In Vietnam corporate bond market, banks and real estate companies dominate the issuance market. These are issued via private placement and based on close relationships between issuers and buyers, often banks and real estate companies. There's little public information available about these bonds, and as previously discussed, they are typically held to maturity because of the absence of the secondary market. In regional countries, although the financial and real estate sectors still dominate the market in corporate bonds, large companies in other industries also raise a lot of funds through corporate bonds. However, combining all of these factors with the small size of corporate bond market, it is clear that the ability of a non-bank and non-real estate company to raise long-term capital is extremely limited in Vietnam. When non-bank, non-real estate companies can raise funds, they must pay a much higher premium. Data analysis reason clearly indicates that short-term liabilities such as deposits and loans from customers and other credit institutions have been major sources of capital among Vietnamese banks for more than a decade. Similarly, the 5 biggest known financial firms' debts have been mostly from current liabilities. So this is scary. It can be seen that manufacturing enterprises' major source of funding come from short-term liabilities. Bank loans still account for a large portion of corporate financing needs in Vietnam. That is very imbalanced. I know a case a long time ago because of this they borrowed short-term debts and finance long-term investment like in a plantation of rubber and such kind of thing, and then they almost got default payment and they almost went bankruptcy and had to sell their assets in a very cheap price. So that is one listed case which was one of the biggest firms in Vietnam before. This is Hoàng Anh Gia Lai Group, HAG. In the last few years, real estate firms which have issued the highest volume of bonds have played a role of key driver in the rapid growth in the corporate bond market in Vietnam. So, but we also see the one of the two biggest borrowers, bond issuers, have said fraudulent scandal cases that I just discussed. Maturities of government and corporate bonds have become more diverse, with more medium and long-term bonds being issued and bought in the market recently. In the Vietnamese government bond market, the diversity in bond maturity is on par with regional countries due to the significant growth in supply for long-term bonds in the last 7 years. The government bond market with diverse maturity helps build a benchmark yield curve and lay the foundation for development of corporate bond market. In the corporate bond market, however, the size of the market for long-term bonds with maturity of 10 years or so or above is still much smaller compared to regional countries, accounting for only 2% of the market, of the whole total market. This indicates that there is extremely limited ability of corporations in Vietnam to raise long-term debt capital from the financial market. Despite the growth in size of the corporate bond market, other indicators of the market that measure market activities such as liquidity and turnover do not show much improvement over the years, especially in the corporate bond market. Most investors in the corporate bond market hold bonds until maturity. Credit rating agencies. Credit rating culture is fairly new in Vietnam, as well as credit rating agencies. Decree number 88/2014 on credit rating services provided a legal basis for credit rating agency to be licensed. Vietnam currently has only 2 domestic credit rating agencies: Phát Rating, which was licensed in 2017, and Fin Group was only licensed in 2020. Both are very new and will take some time to build their creditability and also expertise. By contrast, Field Ratings was established in Philippines in 1985, and Rating Agency Malaysia was established in 1990, and Perfindo in Indonesia was in 1993. So it's more than 30 years ahead of Vietnam, you know. The lack of credit culture and diversity in the investor base and a small and new corporate bond market are reasons behind the low demand for credit rating. Bank and retail investors are the main investors in the market. Banks have their own information sources, as most companies do business with banks. Retail investors seek high-yield, short-term maturity bonds and often do not think about credit risk. To avoid information disclosure and the costs of rating, corporations prefer private placement, which does not require credit rating. This is the dominant method of issuance in the market in Vietnam. The new regulation requiring all large corporate issuances to be rated has become effective in 2023 and will likely boost the demand for the credit rating. I think with recent big scandals that I have discussed, in the future there will be more importance and attention from both the government and also the public for the credit rating. Many regional countries require mandatory credit rating during the new development period of market to build the credit culture. For instance, Malaysia required credit rating until 2016, and India requires credit rating for all issuances, including private issuance. Moreover, the current law does not allow pension funds, public or private, to invest in non-bank corporate bonds. Changing the regulations and allowing pension funds to invest in high credit rating bonds could also improve the market demand for the corporate bond rating. As a conclusion in this bond market, the bond market in Vietnam has experienced substantial change in recent years and get a lot of attention in recent months. Indeed, the market has expanded and now offers more diverse range of products. However, the more in-depth look at the Vietnamese bond market, especially at the corporate bond market, reveals that the limited ability of an average private firm in Vietnam to borrow on a long-term basis. State-owned enterprises account for the large bulk of corporate borrowing, and the market still lags behind more sophisticated regional markets, using the wide range of indicators such as market turnover, market liquidity, and diversity of the investor base. Since opening up its economy in 1989, Vietnam has become a bank-based economy. However, with increasing sustainable economic growth, sound economic fundamentals, and continued efforts in developing the capital markets, the bond market has experienced significant development in recent years, and at least when measured in certain indicators. However, with recent scandals, the restructuring will take a while for the market to get back on track again. So this is the video for today. In the coming videos, I will discuss more on other areas of the capital market, neither some sectors and some specific companies. So stay tuned. If you are interested in Vietnam market and also look at the macro of Vietnam market, you can also look at my other video and discuss about the Vietnam economy and overview of some industries. Have a good day.
To be a good investor, from my own experience, following are the first important steps you need to do. 1. Prepare yourself by learning investment knowledge through reading investment, financial and accounting books from famous and successful investors. 2. Apply and practice your learning and find the best strategy that works for you. 3. Before you find the best strategy that you can make successful investment, diversify your investment portfolio and do not put all the eggs in one basket. Remember, no successes come without failures and pains. So training yourself to practice patience is very important. I hope you get some insights and learn something new from this video. Please subscribe my channel for more future videos.